Hey, yes. I hope everybody's doing good. Hey, I just discovered that there's an HD setting on the Zoom videos. Why it wouldn't default to those settings? It's beyond me, but hopefully this comes out a little bit better. I've been frustrated with the quality of the video, so I'm just gonna hit on what we did today and just briefly some global macro. I'm still on the road at a hotel right now in pretty nice hotel actually, so I might be hanging out here for a few days. But listen, today was a weird day. We didn't do that much. We came in and I sold out of some of my S&P long. So if you guys saw the video that I did on, I titled it "The Last Bounce," and what I'm referring to or trying to make the point of is that the equities, U.S. equities, and risk are trading almost like they did in January. Just a complete, we're widening out again between the reality of the economic situation, or you can put that down here, and equity prices. And that's several factors. It's always several factors. But just like in January, the cycle started rolling over. We've been in a recessionary cycle, what we call the cycle for US growth in the economy since um, third and fourth quarter of 2018. And the market had a spasm, freaked out into December of 08 of 2018. We covered our shorts on the 24th. Beautiful covers. Then the Fed panicked. Powell shit his pants, and then they reinflated asset prices. Well, into January and February, we knew that the ECM was turning in January. We made a call that we could see a high, and we faded it really well. Actually, these are a couple of the sell signals we have on the NASDAQ. I highlighted in our trading room today that I left up these markings we had. We were all over the Russell on the short side on that secondary bounce. And then that was a huge amount of our performance in the first quarter was just the Russell short and being long treasuries. And so this is all stuff that we've known, but I'm just telling you guys now that the market is pricing in earnings that are above the peak of before the virus. So irrespective of like the technicals or where we bounced from, we knew a bounce was going to happen just because how fast and how hard we fell. But now you're starting to price in whether it's Facebook or Google. I mean, we talked about in our team meeting today that you had 5 companies representing pretty much all of the market. And we're pricing in new highs above the cycle peak in earnings. It's just insane. So we're already back into bubble territory. We need to fade this move. Today I added to my Russell shorts, my core shorts. And today was the first day I went back to the short side of the NASDAQ, just briefly, and I covered into the low of the move. And but we're going to start working this now. That doesn't mean we're just been shorting this entire rally for 4 weeks. We knew that we had on our cycle stuff, we came into the week on an 8-9 count into March, and now we've bounced 3-4 days in the middle of it's a half cycle of the 8.6 cycle. So could you continue for 4 weeks up? Of course, but the reality of the situation of how bad the world economy is, U.S. economy, it's going to be hard to continue to push this much higher. So there was a massive short. When I say massive, I mean it was like a 3 Z-score, 1-year Z-score, and S&P short. So typical, everybody shorts into the lows, creates the squeeze, and I still don't think we've worked off a lot of that positioning. So maybe you could push it towards 3,000. It's hard for me to gauge what the vol guys have as far as option strikes that they're playing with. But that's all the positioning of the market. But clearly it's just all about this idea that we're going to V-bottom and be off to the races, which is just absurd. It's absolutely absurd. So we're in a worse shape than we were in January, and the market's pricing in again almost the same perfection. And so it's easier to make sales now, guys, than it was in January, because January we didn't have all the background of the disaster. Now we haven't even seen, we've only, I mean, the earnings that are coming out are maybe 1, 2, 3 weeks of shutdown. We haven't even had a full quarter of these numbers come out. And that's not going to come out till June, July, but the market's going to be ahead of that. So that's all I want to say as far as the backdrop. Today so again, I sold out of a long. I bought the dip here near term, and today was just a weird day. Like the Russell was up the most, came off, we covered pretty well into this low here. Short cover. So I short cover, and I'm still short. Heaviest I've been this entire rally, like 5 or 6 contracts. I know how you want to count across accounts, but so I'm gonna keep playing the Russell on the short side, and then again I'm long a little bit on a couple on S&P, so it's like a 3-to-1 ratio of what I'm short to what I'm long. And I was hoping that we'd bounce the NASDAQ some more to short into it again, and it just stayed flat. So the only thing that bounced was what I was short. Normally, if you were in short intraday and we had a little bit of a bounce, like we could have came out of S&Ps, could have shorted the NASDAQ. The NASDAQ just got wrecked, and then we didn't even get a bounce to sell into. This was like a feeble little wiggle. But that's going to be the setup from here, guys, is we're getting closer to the top of the range, big picture. And so when we see that intermediate term start to roll over via lower lows on the hourly, 4-hour, 30-minute, and we get into what we call the southern hemisphere, then we're going to sell more, be more active on the short side, day trade and core and intermediate term. We bought some puts today in the options group. We're playing some pairs trade. I kind of missed the move on Amazon on the way up, but that is going to be one of my favorite longs is Amazon, just because they're going to swallow up all of small business market share, and then obviously the online story. So I did buy the dip on Amazon this morning. I'm not going to tell you guys everything I do. That's kind of why you got to join some of the programs in the team. But we're back short in Tesla also. So we're still kind of in that mode, or the last bounce mode. It's patient, but you can see the weekly cycles coming up. The daily is going to be feeding into, I think, a high. Daily cycle's already down. Oh, that's a 4-hour. I'm sorry. Yeah, daily cycle's coming up into the end of the week. So we got pie up here. We got a lot of stuff working for the bears. It's just, this was the same in January. You can't just sell every day because you're bearish. You got to be patient. You got to let the market tell you when to add. And there's plenty to do on the long side on this rally also. So we've done a pretty good job about that. That kind of covers equities. Treasuries have really been stuck on the highs and just firm. There's been a little bit of movement in fives that we're trading short fives a little bit, and then long 10s or long 30s. We're still very much treasury bulls we had for almost 2 years now. But I had covered some fives here, 125, 5 plus. I put some back out about 7 ticks higher today. And then we were buying 10s yesterday and the day before, adding back to that core long position after booking some gains pretty well. Just not a lot of movement. I'm just trying to trade the cycles and the ebb and flow. When you get some strength, you're booking some gains. If you get some weakness, you add. Today, you could have sold into the 10-year rally if you wanted also, but that's why I just sold fives instead. Just have a little bit. It's kind of the same as taking profits, but just having a few contracts on the long side in 10s. I'll be a seller tomorrow and the rest of the week if we push back towards 139.5. Gold has been a great place to be. We've been bullish. We've been long. We bought some stuff really well near pi. I like this, and then we did sell some up here on mostly the minis is what I was trading. and we're kind of in the middle. I mean, you could have bought today. I didn't add just because I had enough risk on, but in other markets. But see here, we're adding, taking profit, taking profit. So I'm still core long. I just would love to get back to maybe below 1700 to put some stuff back on. Oil, haven't traded it that much, really watching $10 range. If we get below there, I think the optics are that the market's going to start to panic as far as risk appetite. We kind of played this oil story out a little bit, though. I'm not sure the market's so panicked about it anymore, but it's just more, it's going to feed into more GDP being a disaster. It's just bearish. And we're not going to be bullish on the oil and energy being one of the first sectors we pivot to when this deflationary growth slowing move is over, but not this quarter, guys. Not this quarter. You're buying lower lows. I'd rather still be a seller. This is crazy. All right, I think that's it for global macro. I'm still running the economic crisis package, I called it. And so if you guys go to jenkinscm.com, I basically what I did is just put all our courses together, all our membership, the options program, the options team, and the prop trading program. It's all together in one price, and it's 50% of what just the prop program used to be. And so if you guys don't know, I mean, this isn't going to be forever. Get me out of the way. Hopefully you can see this. Cycle Edge is about just kind of our basic membership. It's all my trading alerts. It's my real-time alerts product across all our asset classes, what the model's doing, what I'm doing. You don't get all the day trade signals because that's pretty high frequency. It's just too hard to. I'm trying to trade with a team, coach them, mentor them, and manage my own risk. It's just hard for me to put every single day trade in. But when I'm swing trading, when we're together in our prop team trading live every day, the Cycle Edge is just designed for, it's basically the real-time alerts. It's $250 a year. I'm running special today or special now also. It's only $1 to try that out. So you can come be a part of the team. Cycle Edge over here is just an example of what we do. So it's posted analysis. Just basically, it's like our basic membership. If you're getting a lot of real-time alerts with the 80+ winning percentage across all markets, it's basically your access to the model, and then that'll push to your phone, etc. Option Edge is designed around our trading model, but it has all my spreads that I like to do. I teach you guys get the training, and I teach you the basics of options, what I like, what strategies I like, from like call ratio spreads, which nobody really talks about. And then you're getting our trade alerts from the options side. So like I said, we're involved in Tesla right now, Amazon. We did some stuff on the SPYs, SPY. That's the options edge. And then prop program. This was basically my old coaching mentorship stuff that I, instead of just being 8 weeks, I said, you know what? We'll make the coaching mentorship part of the prop program, because in addition, now we're going to be together with me every day. So you still have that interaction. You still have access to me, the coaching, the questions. We can still work, we're working together every day. Instead of before, it was just a couple hours for 8 weeks. And guys paid between $4,000 and $5,000 for that. But it's amazing because you got to go outside yourself and your own thinking and have a coach come in and say, hey, have you tried this? Hey, have you tried this? Well, why are you doing this? Send me your trades. And we look at it, and then we work on the trading plan. Who's holding you accountable? Anybody that's good at what they do, they have a coach. So if you want to be serious about trading, and or you're not where you're at, consistency or P&L, then you need a coach. And so in addition, on the prop program, I went out and did a deal with a Chicago firm to help you guys not have to risk your own capital, get the training, trade with me, learn, and then apply what you learned in kind of a riskless environment where you can trade virtual and then have the opportunity to work into a futures and forex account with 150,000 of buying power. It only costs you a couple $100 a month and you have no risk. So that's a great deal, because I see it's just a lot of people don't have the capital and they don't have the capital to make their day trading dreams a reality. So that's pretty much it, guys. If you want to sign up for this program, so you get the prop program, the options, the cycle edge, and then all my courses, whether it's the pi cycle trading course, my intro to forex, the full directional model that was forwards institutionally from when I was running the rates desk, trading 10 years, facing the primary dealers and big buy side shops, the options course. It's everything I've ever created directionally for you guys. It's all now one price. Again, prop team used to be $5,000. Option edge used to be 2,500. Just those two programs is 75 grand. Now it's just one price, because everything that's happening in the markets and this whole lockdown and just all the insanity, guys, is like, you guys, there's so many people looking for extra income, need help, need to protect their investments. They need options to take control of their finances and not be a victim to everything that's going on. I mean, when we've had all these things happen, as far as like people's work and their jobs and being shut down, being told you have to do all this stuff, and regardless of the politics, to be able to crash the markets on that, but you actually come out and benefit, that's the goal. So you don't have to be a victim of everything that rolls over when the economy does this. You can actually benefit from it. And I've been saying this, that we've had the best quarter as a team. I've personally had the best record and performance we've had. And it's not about like cheering on or being being boastful in a bear market. It's just about taking advantage of it. And there's going to be huge opportunities on the downside when we bottom out. So I just wanted to get that and make it available to as many people as possible. So come to the membership section here, click this if you guys want to sign up and take advantage of this package I did. Come to this prop program area, click get access, and then here's the pricing on that. All right. And then if you got any other questions whatsoever, go to the top of come up here, chat room, sign up to be part of our chat room. There's a free chat room link, and you can come in. That'll put you guys in here. We use Symphony for now, and you can ask me questions inside of here. You could also email me. At Jenkins right here, Jenkins JRM17 at outlook.com. Jenkins 17 RM at outlook.com. Jenkins RM17 at outlook.com. All right, guys. It's been a long day. I gotta go grab some food. Hope you had a great trading day. I think we are setting up. We got a lot of tech earnings this week, and I think when we get that out of the way, we're gonna really see the spread between what the market's pricing in, being all optimistic again, and the reality of the economies and life start to converge. That's what happened last time in January. I think we're setting up to see the same. So I don't want you guys to miss it. All right. I'll see some of you in the morning. Later.